Parliament's nervous as Australia's economic illusion begins to crack. Hello again, it's Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. And today I'm joined by Economist John Adams. Hello, John.
Hello, sir.
Now, you've been bouncing around Canberra.
I have been back in Canberra this week for the second week in a row and speaking to various members of Parliament. And also in the last 24 hours, certain members of Parliament have been calling me up and to discuss the economic news of the week. And people are getting nervous.
Yeah, well, I think they've got some grounds based on the latest data that's there and some of the other things that are going on at the moment.
There were several releases of data this week from the Australian Bureau of Statistics, and it was all, in my view, very bad news. Not the sort of news that the government was hoping for, even though they put up a popular front. But basically on Tuesday, we saw the foreign debt numbers come out, and we saw that foreign debt hit a record high at 1.044 trillion. So that is a Australian record high in terms of net foreign debt. And then obviously on Wednesday, the national accounts came out. And we saw, and obviously you've covered this, so we had low GDP growth, we had negative growth, or whether the economy shrank in per capita terms, and we also had the lowest rate of household saving since the GFC. So they were some very bad news, and obviously there's been a lot of media in the last 24 hours about a softening economy, and what does this mean? And then today we saw some retail figures come out for October. And New South Wales in particular saw a negative fall in retail sales, whereas some of the other states were a little bit mixed. So now one could say that New South Wales may be due to seasonal factors, or it could be because of what's happening with the Sydney housing market and that impact on confidence and on people's willingness to spend at the shops.
Yeah, so you go through that litany, and there are some interesting questions. Perhaps we can't touch them now, but like the savings ratio numbers got all reset.
Yes.
Right? But the trend is still down.
The trend is still down.
Even if the absolute number moved. And the New South Wales retail number was very negative compared with Victoria, right? So Victoria was quite strongly positive right at the top. New South Wales right down the bottom.
Yes.
It'd be interesting to see whether that translates to a falling rate in Victoria in about 6 months' time, because the Victorian economy, in my view, is about 6 months behind based on where home prices are. So we'll see.
So the point there is that even though Melbourne house prices are coming down at a slower rate than in terms of Sydney, in terms of consumer sentiment, they are still lagging. Yeah.
So Sydney started falling 6 to 9 months before Melbourne started falling.
Right, yep.
The rate at which Melbourne is actually falling in terms of house prices is slightly greater than where Sydney was, but they're still somewhat behind.
Yes.
And so if you go through the drop this year, right, we're at 7 or 8% in Sydney, we're only 5 or 6% in Melbourne.
Yes.
Right?
Yeah.
My theory is that the economy in Victoria is about 6 months behind where the economy in New South Wales is, so I'm expecting more bad news in Victoria.
Interesting. So obviously, because we are seeing some sort of bad news, we're seeing confidence fall in certain segments of the market. There are people, particularly on the government backbench, who are nervous that the narrative from Morrison and Frydenberg won't be sustainable between now and the election. So we've covered this in previous episodes, but the Prime Minister and the Treasurer are saying the economy is strong. Supposedly confidence, is still quite robust. AAA credit rating, reasonable growth, wages are starting to sort of pick up a little bit. Everything is fine. No issue with debt. No systemic risks. No systemic crisis. We are the best stewards of the economy. Re-elect us, even though they've lost 50 news polls in a row. So that is what they've been doing. And I've had several conversations with people who are now coming to the realization that, and some of these people obviously have watched this show, so they know that something's wrong, but they are now coming to the more evident conclusion that the data is reflecting that the illusion that the establishment has been trying to push on the public is starting to crack, and that Morrison and Frydenberg's credibility will be further diminished on the economic front in the months to come, leading into the budget and then obviously into the general election in May.
And Frydenberg in particular made a really interesting comment about why the savings ratio was sliding.
Yes.
Which I just fell over when I heard him say it, because I couldn't believe that he said it.
Indeed. Without saying too much, there is significant. I will say this: there are significant concerns from several quarters within Parliament and out of Parliament as to whether the Treasurer is fully across the brief. So when we listen to the Treasurer, given that there are some concerns about his level of competence and knowledge, we have to sort of treat his comments in a special category, I believe. So I thought it'd be good that if we just sort of cover a couple of the quotes from the Treasurer in terms of the illusion that they continue to perpetuate. So obviously. Going into yesterday's press conference with the release of the national accounts, the Treasurer had a particular statement that he started with, and the statement goes, the Australian economy is strong and is in good shape. We are in our 27th year of consecutive economic growth. Unemployment is down to 5%, and over 1.1 million jobs have been created under the Liberal National Government. Business conditions and consumer confidence remain strong. Our AAA credit rating has been reaffirmed, and next year we'll deliver the first budget surplus in over a decade. So this is the government's narrative between now and the election. This is the illusion. This is why most of the population is asleep to the risks that we've been talking about for the last 6 months. And the government, particularly because Morrison was the Treasurer and he's locked himself into this narrative, they can't really adjust. So they are continuing this position, even though the numbers that are coming out through the week were not particularly robust.
And it's worth saying, he's right. Those jobs were created, right? Employment or unemployment is low, right? But the question is, are there the right indicators? And are they really telling us the full picture?
Yes. I mean, like the modern politician, rather than giving the objective truth to the public, they cherry pick the stats that fit their narrative. And so obviously my disappointment with the establishment media is that they don't look at the full set of figures and try to tell the public, well, okay, the government says this, but this is the real situation. So that's why a lot of people are coming to shows like ours to actually get a more genuine appraisal of where the economy is at. So on this issue of the savings, household savings ratio being the lowest since the GFC, this point has come up in several interviews. There was at the press conference he was asked about it. He was also asked this morning on ABC radio about it. And so he basically has a particular rationale, and we'll go with this quote. So he said yesterday at the press conference, the household savings ratio is a reflection of people's confidence in the economy, that they feel they can spend, and it is also a reflection of historically low interest rates. So on the latter point, he's saying that because interest rates are so low, there's not much of an incentive to put your money in the bank. Therefore, that's why people are getting into debt, and obviously people are spending, but also people feel confident, they feel robust, and that's why the household savings ratio is going to fall. He goes back to in a later quote, he was sort of talking about after the GFC, the savings spiked up as people got very scared, and now that people are feeling fantastic, that's why the savings falling. That's why the savings rate is falling. Now, so I don't think that stacks up. And obviously, with your household data, maybe you can sort of speak to this. What do you think households are saying on this issue of confidence?
Well, I use the Financial Confidence Index analysis out of my household surveys, right? And that's quite granular. And I've been tracking confidence levels significantly falling over recent months. In fact, we're pretty much as low as it's been for a long time. And I break it down into income, expenditure, savings, home prices, so we can get a bit of a handle on that. And there are a lot of people who are only keeping their budgets afloat by pulling money out of the bank, right? So that's one of the prime reasons why the household savings ratio is falling. I agree, returns on deposits are quite low, and people tell me that, but they still want to keep money in the bank because they think it's still important that they have a nest egg.
Yes.
But the proportion of people with the nest egg is definitely going down. And there's a high correlation between those who are in mortgage stress and with little or no savings.
Yes.
Right?
Yes.
Now, there are other segments of the population who have no mortgages and who are actually better placed, and they have a little bit more money in the bank and are also a little bit more confident and are spending a little more. But if you look at it in terms of weight of numbers, it's about a third of those households who are actually a little bit more positive, but 2/3 are much less positive than they were.
Yes.
And even those who are more positive, those without the mortgages, the absolute level of confidence is lower than it was a year or 18 months ago.
Yes.
So to my mind, the idea that the savings ratio is dropping because people are way more confident just doesn't pass any muster. And even the Melbourne Institute numbers are not actually showing a significant rise in consumer confidence. It's not too bad, but it's not rising. So to my mind, that just doesn't make any sense.
So basically your data, which is obviously independent of government, it is saying that people's household budgets are so tight that the only way that they can stop them, that they can keep themselves afloat and stopping getting them into sort of financial difficulty in terms of default or missing payments, etc., is that they have to draw down on savings. So certain journalists have tried to put that forward to the Treasurer, and he just says he has a radically different interpretation of the numbers.
Well, I wonder on what basis his interpretation is driven from. Remember that mine is based on 52,000 household surveys, the most recent data from a week ago.
Yes.
Right? I think that's probably pretty compelling in terms of what's going on, right? And I have to say that the more I look at the data, the more I feel that households are really hunkering down. And in fact, the retail figures, which are relatively flat, is another indicator of that. Because if households were really very, very positive, you would expect much stronger retail statistics than we're getting.
Indeed.
So if they're not spending it in the retail sector, where else are they spending it? And the answer is they're not.
Indeed. So you have a really good graph that will sort of show on the screen now. So really just to surmise the comments you just made, basically what we're saying is that confidence right across the economy is actually falling. And the government likes to cherry pick certain surveys which show that confidence is perhaps slightly stronger than your survey, but your survey is saying that across the economy it is going down. And then you've broken your survey population into various cohorts. So there is one cohort that has no debt, that has some assets, particularly in the share market, and they feel pretty confident. So the message that the government is putting out will resonate with that particular cohort, and that's about a third of the population. But then you get two other cohorts. One is with people with mortgages who own some property, and they could either be owner-occupier or investors, and those people have much less confidence because of debt levels, because of cost of living, because of financial stress and mortgage stress.
And particularly property investors who've really tanked.
Yes.
Right, relative to owner-occupiers.
Yeah, so investors have tanked further more than owner-occupiers.
Yep.
And then you have the third cohort, which are renters, and renters, their level of economic confidence has gone through the floor.
Yep.
So basically what we're saying is that there is a constituency out there in the public who will, even though the confidence is going down because of the share market volatility and the falling house prices, they will accept the government's narrative because their financial circumstances are relatively consistent with this upbeat message that the Prime Minister and the Treasurer are saying. But there's 2/3 of the population, so people with mortgages or renters who are really struggling big time, and their economic circumstances don't reflect the government's narrative. And because it doesn't, one can suspect that credibility, the government's economic credibility, is being diminished among those people because their economic circumstances don't reflect what the government is saying. And this is precisely the point that I made to certain members of the coalition when I was in Parliament on Tuesday, but also when I got a phone call this morning from a coalition senator. The government's narrative isn't being sustained by the data, by the anecdotal commentary, the evidence, social media, etc. So the government is really stuck. There is a reason I believe that the government has lost 50 news polls in a row, and it is because of these big ticket economic issues that they really haven't managed appropriately. And obviously, people think that the economy is a strong suit for the government. I actually think if they lose the election, it's largely because it's the economy. It's the cost of living. It is this financial burden. So even though there is low unemployment, people have jobs, people don't feel economically robust. They don't feel buoyant. And I think on that basis alone, people are going to point at a whole host of factors, including Turnbull's removal. But before Turnbull was removed, he lost 40 news polls. Abbott lost 30 news polls. So there is some big economic undercurrents which are really impacting the standing of the government. And I suspect even if we see a change of governments in May, these economic issues are not going to go away. And without sort of major economic surgery, the new government may struggle in the polls as well because of the anxiety that households have.
Well, you're absolutely right. And bear in mind that in real terms, incomes overall have not grown since 2012.
Yes.
Right? So most households are looking around saying, I see no prospect of getting a real step forward in terms of my economic prospects at the moment, right? And then they're saying, and home prices are diving, right? And in fact, the rate of fall looks to be accelerating. And then they hear about the risks of mortgage rates going up because of international funding pressures and those sorts of things. So you can understand why it is that households are pretty nervous. And then if you think more broadly about things like climate change and power policy, critical big picture issues, none of which are actually being tackled, you can begin to understand why people are actually not very confident about the government, yet alone their own financial position.
Yes. Yeah, speaking to certain people in Parliament, electricity prices is a very big issue. And one thing, obviously, living in New South Wales that I didn't fully appreciate is how significant power prices are going up in Queensland.
Yep.
And a lot of people in Queensland are going without power because they just can't afford it. So certain Queensland politicians are getting sort of retail feedback from the public in Queensland about electricity. So that is a very big issue that I perhaps didn't fully appreciate as to what was happening in that part of the economy. So I think so a couple of points to go from here. So I think talking about the PM and the Treasurer, they're basically stuck. They have put their credibility on a narrative, and they can't change it. They have to try to stick with it between now and the election. If something international were to occur, international shock like we've been talking about, that may give them an excuse to sort of move away from what they've been saying. But absent of that, I think as we go forward towards the election, their credibility will further diminish because the data, I suspect, is going to be weak. So that's probably point number one. Point number two is that most members of the public may not be aware that Tim Wilson, the member for Golston, who's a Liberal backbencher, who's also the chairman of the House Economics Committee, and obviously, that's quite significant, being the chairman of an economics committee within Parliament. He gave a speech on Tuesday night, and this is his second speech of the year talking about the issues that we've been talking about. So he is what I would say is the sole voice on the public record in Parliament who has talking about these systemic crises. So he gave a speech on the 27th of February 2018, so this year. He mentioned me. He mentioned a whole host of things that was sort of based on my work and a few other things he drew on. And so he decided to come back to the House in the last week of sittings to update the House about these challenges, and he'd really continued on those themes. So we'll go through a few quotes that Tim sort of said in that speech, but there is clear evidence that people on the backbench have a very different view about what is really going on. Some people, most of them will not say anything on the public record, and this is why we did the video previously about stage 4 economic cancer, but there is one person with the courage of his convictions and the sense of moral obligation to say something publicly, even though the media won't report his German speech, but he did sort of say certain things. So obviously, because it's a matter of public fact, we're happy to sort of go through it. So Tim Wilson, just a couple of quotes from his February speech, and then we'll go to what he said earlier this week. So in February, he said a couple of interesting things. So the first one he said was, this parliament must confront the serious economic risks on our horizon and the structural imbalances in our economy. The warning signs are all there. We have alarming rates of public and private debt, low interest rates, inflated asset prices, and excessive public spending. And then he went on to say, Australia is completely exposed to global economic shocks. Many households are now inadvertently exposed to international markets and foreign policymakers. So this is what he said in February. He got some press out of it. News.com did a story about him. Sky News interviewed him as well. So and to be honest, he got some pushback internally from the ministry for saying these things on the public record. But he did decide to come back on the public record on Tuesday, and we'll go through a couple of quotes from that. So he said, "It's now, quote, it's time to take stock of not just Australia's, but also the global structural economic imbalances that leave us and many other countries economically vulnerable to shocks. The reality is that complacency has exposed the world to incredible financial instability that should make everyone mindful of the circumstances and the times in which we live." And then he went on to say in the speech, what we need to do is to be prudent and responsible in working through the structural challenges this country faces. So clearly, someone who understands economics, the chairman of the House Economics Committee, he is a sole voice on the backbench, talking openly about these things. So people can download this speech. I would encourage people to read Tim's work, to encourage Tim to keep going, to obviously seek to influence the Prime Minister and the Treasurer, who are sort of lockstep with this narrative, which isn't good economics. And it's definitely not good politics. Now that we've sort of spoken about the government's position, the data, what Tim Wilson has said, what your data is saying, what are the implications of all of this? So obviously we have seen what I would call cash for comment economists out there in the public realm today. That they have been calling now for an interest rate cut. So basically, that they want more stimulus. The ABC. Had these people on talking about this sort of stuff, and my confidence in the ABC telling the full economic picture, it is sort of diminishing. My confidence in the ABC is diminishing every day. So warning to the viewers: anytime you hear the ABC talk about prominent economists or respected economists, these are the establishment cash for comment economists who just says everything fine, nothing to look at here. So, but obviously you have some of them out there today saying that the data is now supporting a interest rate cut. Some say that the Reserve Bank has misjudged the state of the economy. It's much weaker than what they thought, and that they should be cutting by May. Now, at the GFC, they took the cash rate to 3%, saying it's an emergency low. 10 years on, it's at 1.5%. So 3% was emergency low. What is 1.5%? It must be beyond an emergency. It must be crisis. And now they're saying that we need to go even lower. Well, how low do we go with the interest rates until people realize that this is a bubble, and this is a bubble of enormous astronomical proportions, the biggest in the country's history, unsustainable. But these people saying let's cut interest rates. All they're really saying is let's kick the can down the road. Let's have more stimulus. We need more credit. We need more debt. We need to kick the can down the road. That is what these people are saying, and that is completely unsustainable, indefensible, and more people are likely to get themselves into greater financial difficulty if the Reserve Bank was to cut interest rates in the next 6 months.
And I agree with that. And I'd also say, even if they do, it will make no difference at all, in my view. For two reasons. One is, even if they cut towards zero, the banks will not be able to pass those rate cuts on to consumers because of international funding pressures going through the roof. Look at LIBOR, it's continuing to rise. And the funding pressures that they've got and the margin pressures that they've got. So that's the first point. And 40% of their books are not funded by local but by international, right? The second point is, the banks are already cutting deposit rates. And if you look at deposit rates now compared with even a couple of months ago, they are significantly down. So the way that the banks are actually trying to square their financial circle is to squeeze the deposit side of the equation. If rates will cut further, that means that deposit rates will go to close to zero. Right? Now think about the implications of that for the 1/3 of the population who are reliant on savings. Right?
Including retirees.
Including retirees in particular. Right?
Yeah.
So that will be a disaster for them.
Yes.
Right?
Yes.
So it won't help mortgagors. It will be a disaster for savers. Right? And it will force the Reserve Bank ultimately to go into quantitative easing mode and printing money, I think.
Yes.
So my view is, even asking for a rate cut, and I personally think the Reserve Bank is likely to cut, it won't solve the problem.
It will not solve the problem. For the last more than 12 months, I have been talking to these politicians time and again. I'm saying Australian history is a story of complacency. We sail into crises. We don't attempt to address the crisis or the problems before the crisis hits. This is what happened in the 1880s. This is what happened in the 1920s. And from all accounts, political, but also in terms of the public debate, it would appear that the situation is unstable, it is unsustainable, and we are going to sail, unfortunately, to Armageddon with no prospect of any preemptive economic surgery work done before the crisis hits.
No, and in fact, we're just looking out the window and there's a couple of icebergs over there that don't look too difficult, right? And the big one ahead, everybody's just ignoring. It's just remarkable.
It is truly the Titanic 100 years on.
Yeah, thanks for that, John. I always enjoy talking to you, but I always come away feeling slightly gloomy afterwards. Thank you. So there you have it. I'm afraid that the story continues, and it looks to me as though the politicians in Canberra are wandering around like headless chickens at the moment, trying to work out what to do, but not seeing the true state of things. If you like what you've seen here today, please share the post, add a comment or a question, read them all, and check back next time for our next post. I'm Martin North from Digital Finance Analytics. Many thanks for watching. See you next time.